according to Bismarck Rewani and the rest of his team at Financial Derivatives, the year 2016 was called a year of growth and commodity turmoil. They say, well, bye-bye to petrol subsidies. That will likely come in 2016. Commodities will go down deeper. Prices will crash. Naira-dollar value will be a set of economic parameters that will be allowed for managing floating rate. FDC lent its voice to currency adjustment that is expected in 2016. There will be high-profile conviction of corrupt public officials. That's what Bismarck Rewani and his Financial Derivatives issued late yesterday, and says the year 2016 will be goodbye to vanity. 2015 will be a year to forget, but things would make you fasten your seatbelt in the new year. What's the view of the Lagos Chamber of Commerce and Industry, the largest organized private sector body in a single state in Nigeria, the state with the largest GDP, $136 billion. Muda Yusuf is the head of the LCCI, the Director General. Good morning. Thank you very much for coming. Very last minute. Very interesting stories, some to make you smile, others to make you, well, shed some tears, make you bleary-eyed. Give us a sense of looking at where we are since the elections. First, we started with body language. Now it looks like the president isn't using body language. He's now talking and acting.
Well, the year has been quite challenging. First, because on account of the uncertainty that we started with, starting from the period of the election, which affected quite a lot of issues of confidence. Then also on account of some of the policy responses to the challenges of oil price collapse, because the drop in oil price also brought a lot of strain to the economy, which affected aggregate demand, it affected cash flow, and the uncertainty, which you also refer to as perhaps the body language, because for a long time, it wasn't quite clear the direction of economic policy of government. And even up till now, there's still a bit of guess as to what direction the government is going. So a combination of the challenge of uncertainty, combination of the factor of the fact that there was a major contraction fiscally, I'm talking in fiscal terms now, as a result of the drop in oil price, which affected aggregate demand, affected capacity utilization in industries and all of that. So the combination of all of that, of course, we also had the issue of the security issues. The combination of all of that actually took a big toll on investment. And on top of that, we had the issue of the foreign exchange market, which was also which had a major impact on many businesses.
Overall, as we end the year, put it for us in one single sentence, a few words, what the year had been. Financial Derivatives says it's a year to forget.
I agree with FDC. It's a year to forget. To forget in the sense that really there was a lot of, there was no, the kind of excitement we expect from entrepreneurs and the kind of excitement that investors expected, immediately after the election did not actually come. And again, because the government under this administration tends to focus more on the issues of security, anti-corruption, and did not say much about private sector, about economic policy. And in fact, as we speak, the president has not addressed the organized private sector as a group, to tell them what his plans are and things like that,
Okay,
these are some of the issues.
But you agree it's a year to forget?
It's a year to forget.
So we can take that away. Yeah. We'll put that in the box. Yeah. Now let's talk about 2016. Yeah. Not much. We're still looking at the medium-term document. There will be more debates on it. That has started. The Senate Deputy President says perhaps we should do $40 a barrel. Some other senators says, look, we should do lower, considering the fact that oil could bottom out again, perhaps to 35. We don't want to get caught up in that high sea, high current. And then at what current foreign exchange rates are we doing the 2016? We don't have full details of that yet. Quite a lot are yet unclear, but from where we are right now, from what we know, and the size of the budget and the deficit, there's likely to be in that basket. Give us your view as someone who comes from the organized private sector.
Well, there are two components to this. There is the assumptions within the framework of the MTF. There's also the structure of the budget that is also emerging from the framework. On the assumptions, the benchmark, oil benchmark of $38, for me, is conservative enough. It's something that I think we can work with. And as we progress, of course, there could be adjustments. It is not cast in stone. That is my belief. I think the $38 per barrel benchmark is a good one. Then the foreign exchange rate. From what I've read, the Minister of National Planning did say that they are working with the exchange rates given to them by the CBN, which I believe is the current exchange rate.
Around 190.
199, close to 200. For me, that is not realistic. Because as it is, it's like a subsidized exchange rate. So we need to have an exchange rate that better reflects the market realities.
What figure are you looking at?
Well, for this, it's difficult to predict, but I think it will be between maybe 215 to 220. You know, but it could get worse. But what is important is that we should make sure that the exchange rate is close as much as possible to the market realities.
With the size of the budget and the deficit therein, do you think we can afford to devalue in 2016?
You see, it's not a question of whether we can afford. It's a question of what the fundamentals are. We are running an economy. And the prices of any commodity, including the exchange rate, will have to be influenced by the fundamentals. We don't have much control over the fundamentals. And in order to run this economy efficiently, we should run it in a way that reflects the fundamentals that drive the economy. So I don't think it's something over which we have much choice. For as long as we adopt the kind of model that we are adopting now, for so much we continue to have a crisis, especially in the private sector and investment space. Just yesterday I was reading in the papers, the airlines are having issues with over 500 billion naira, which they are not able to remit to their parent companies, locked up in the banking system, because they have no access to Forex. So whatever it is, we have to create liquidity in the foreign exchange market for this economy to move on. And the way to create the liquidity is to allow the market to play its role in the market, in the exchange rate.
The central bank is looking at the entire portfolio, and it looks like the foreign reserves is drying up. We're now about $29.9 billion. That's about how many months? Less than 6 months import cover. So what do we do? Money is not coming in as we would want to.
That is the more reason why you have to allow the market to fix the rate. Because the more you fix the rate the way it is, the more pressure you create for the market. But we don't. So it's a contradiction.
So why do we have the backbone? Do we have the what do you call it? The axle to withstand it? Well, from an economic productive point of view.
The reality today is that exchange rates is about 240, 245. Getting close to 250 outside the official market. And I maintain that the CBN exchange rate today is a subsidized exchange rate. And once you have a subsidized product, especially in the face of weak supply, you have a crisis.
Okay.
We have, the kind of crisis we are facing with subsidy in petroleum.
We're subsidizing foreign
yes, we are subsidizing foreign exchange as well. Okay. And it comes with all sorts of problems.
Okay, let's spend about 5 minutes to talk about where do you think the government wants to spend massively in infrastructure, whatever, capital projects in 2015. How much of these do you think should go to those infrastructure that would drive small and medium enterprises?
Well, the good thing is that looking at the structure of the MTF, the relativity of recurrent to capital is getting better in favor of capital. And I'm also hopeful that within the context of the capital expenditure, the infrastructure component will be much higher than what we used to have. So we are likely to see an improvement. But if you relate what we have now to the infrastructure deficit that we have, it's still a far cry. If you look at the infrastructure master plan, which was prepared by the former administration. The plan emphasizes to spend about $3 trillion over 30 years. And 50% of that is expected to come from the private sector. The point I'm making is that because of the huge infrastructure deficit that we have, I've not seen any clear statements from this administration on what role the private sector will play in the delivery of infrastructure. And that is very key, because the government doesn't have the resources. And there are funds all over the world. There are fund managers globally looking for opportunities to invest. So it is very important to address this issue of infrastructure. We should look beyond the budget. We should look to expand the space for the private sector and to see how we can harness private sector capital, private sector expertise to provide infrastructure.
Do you think that the $25 billion new infrastructure fund initiative will address that?
Well, it will address it, but not sufficiently, not adequately.
At least there are no full details of that.
No full details, and in any case, they are talking of bond. That is still a form of borrowing. What I'm talking about is private sector capital, not borrowing.
Borrowing is just about 12% of the GDP to debt ratio is about 12%, so there's still more room. The head of the DMO says, well, we still have enough room to borrow.
That is debatable. It's debatable.
And that's why we're debating it here.
Yes, because when you look at the ratio to GDP, what is the ratio to revenue? You have to look at that. Because it is one thing to have a big GDP. What is the capacity of the GDP to generate revenue? Agri contributes about 23% to GDP. How much revenue can you get from agriculture? How much tax can you get from agriculture? So you have to localize some of these parameters so that you are able to do what is sustainable. I think the way to go, right, because look at how much we are spending on debt service. In the last year, it's close to ₦1 trillion on debt service. Is that sustainable? And now in the 2016 budget, we are looking at even increasing the debt profile. So my view is that we have to look at a framework to expand the scope for the private sector within the context of PPP to deliver more infrastructure.
This conversation is not over yet, but we've got to let you go at this point.
Thank you very much.
Thank you very much. We appreciate your time for coming at very short notice. Muda Yusuf, Director General at the Lagos Chamber of Commerce and Industry.